Most people imagine the Federal Reserve as just another government agency, a big office in Washington that prints money and controls interest rates. But the truth is far more complex and in many ways far more mysterious. The Federal Reserve, often simply called the Fed, holds immense power over the American economy. It influences how much money is in circulation, what loans cost, and even how much you pay for groceries or gas. Yet, few truly understand how it works or who really benefits from its decisions. This is what they don't tell you about the Federal Reserve and America's money. The story begins in the early 1900s after a series of devastating financial panics shocked the U.S. economy. In 1907, the banking system nearly collapsed and confidence in Wall Street was at an all-time low. To prevent another crisis, a secret meeting was held on Jekyll Island off the coast of Georgia. There, a small group of bankers led by Senator Nelson Aldrich drafted the blueprint for what would become the Federal Reserve. It wasn't a public event, nor was it widely known at the time. In fact, the details were so secretive that the participants used code names to hide their identities. When the Federal Reserve Act was passed in 1913, the groundwork for modern American money was set, not by ordinary citizens, but by powerful financial elites. The Federal Reserve is often described as an independent government institution, but in reality it's a hybrid system, part public, part private. It consists of a central board of governors in Washington, D.C., and 12 regional Federal Reserve banks across the country, each with its own board of directors. These regional banks are technically owned by private member banks, giving the financial industry a direct seat at the table. That structure means the Fed operates independently of Congress and the President in making many of its key decisions that affect every corner of the economy. The Fed's main tool is monetary policy, adjusting interest rates and controlling the supply of money. When it lowers interest rates, borrowing becomes cheaper, businesses expand, and consumers spend money. When it raises rates, the opposite happens. Loans slow down, inflation drops, and the economy cools. It sounds simple, but every move the Fed makes can have massive ripple effects. A single policy change can boost the stock market, send mortgage rates soaring, or even trigger a recession. In many ways, the Federal Reserve doesn't just influence the economy, it is the economy's heartbeat. But here is the part few people talk about. The Fed doesn't actually print money, at least not in the way you might think. Physical cash is printed by the U.S. Treasury, but the Fed controls the flow of digital money through a vast electronic network. With a few keystrokes, it can create or remove billions of dollars from the financial system. During the 2008 financial crisis and again during the COVID-19 pandemic, the Federal Reserve injected trillions of dollars into the economy to stabilize banks and markets. It was a rescue mission, but also a stark reminder of just how much power the Fed holds to shape wealth, inflation, and inequality. Critics argue that this system benefits the wealthy far more than the working class. When the Fed pumps money into the economy, it often flows first into banks and corporations, inflating asset prices like stocks and real estate, while everyday wages lag behind. Supporters, however, claim the Fed's actions prevent economic collapse and keep the dollar strong in a volatile world. Either way, it is clear that the institution designed to protect stability has also become one of the most powerful forces in shaping America's financial destiny. Today, debates over the Federal Reserve's role are louder than ever. Some call for more transparency, others for a complete overhaul. With inflation, national debt, and digital currencies reshaping global finance, questions about who controls America's money are becoming impossible to ignore. The Federal Reserve wasn't created in a vacuum. It was built out of fear, necessity, and ambition. And more than a century later, it still operates largely out of public view, steering the economy with invisible hands. What they don't tell you about the Fed is this: it doesn't just manage the dollar, it manages the foundation of money itself, which is the most valuable currency of all.